Hello everybody, welcome back. And just to let you know, this is pretty serious. If you're in this coin right here, Sxp, good luck to you. All right, good luck to you. And I know that it's very tempting to buy this bottom because it appears that there's not, this is a low. But when something breaks down from this sort of level and comes down to a level that's unseen on the chart that you're trading from, don't go trying to catch knives on something like that. And I'll tell you why. Let's have a look at Bitcoin specifically. All right, Bitcoin is at a very, very high point in its career. All right, it's basically closed a weekly higher than it has in over 2 years. Right, a weekly candle that would be, not a price. So it's very, very high. Let's have a look at some of these indicators. So the money flow index can obviously go higher, that's fine. But what you've noticed is that with a lot of these Bitcoin pumps, alts have actually dumped in their dollar value as well, and the dumps have been horrendous across the board. So alts aren't really the place to be trading. If you are trading alts, you want to be trading the strong alts like Ethereum, maybe Chainlink, Litecoin, the classics, basically the classic coins, right? You don't want to be trading these tiny little things, even if you think you're going to catch a bounce. Now we're at a very, very scary moment right now. The scariest moment I'd probably say in recent Bitcoin times, because this line here is supposed to signify bull run time, right? When we're above it and being supported on it, this is supposed to be bull run time, and I'll show you why. Because when we get rejected from it, it's always nasty. This chart goes back over 3.5 years, right? So rejections and supports, rejections and supports, and rejections and rejections and rejections and supports. So what we're looking to see, what we should have seen by now, or what we're hoping to see maybe even this week, is a decent support and a bounce from here. But these wicks here, constant rejection, and on top of that, I'd probably say a lot of that's to do with the rest of the market. Look at the S&P right now, falling out the sky, completely falling, and same with the Nasdaq, same with commodities, oil. We're moving into a second wave. We're well into a second wave So there's a lot of economic and social factors which is going to drive down the prices of traditional markets. Traditional markets are tied into cryptocurrencies without a doubt, Bitcoin especially. Bitcoin has reached a really high point, and if it breaks down below here, it'll be really, really nasty. I'll show you how nasty it can be. Every time we've broken down below it, we retrace massively. 20% recently. Let's have a look at the last time we broke down beneath it. This was very nasty indeed. This one all the way down to the bottom, talking 37%, and the list goes on. I mean, look at this one here. We came up a wick to test it, and then all the way down to its bottom here, we're talking 63%. So if Bitcoin retraces like it has done today by, what would this be, about 3%, and you see something like Sxp retraced by 15%, you can only imagine what the state of it's going to be at the end of a retracement after this fact, if this breaks down, which it could do. If this breaks down, we're talking 10, 15, maybe more percent. That's just going to annihilate the price of Sxp. Sxp is going to look like the way sushi looked. It's going to look like that. We're going to go down to its all-time lows. We're going to go down to, I'd say we're almost certainly at this rate going to go down into the 70-cent zone. I'll probably say if that gets broken, then we're coming right back down, maybe even as low as 20, because this could be a nasty retracement, and this could even end up being, bearish. Because if the traditional markets go bearish too, and I mean like significantly bearish, this will also go bearish. We saw what happened the last time we had this. I'm not going to say this sort of thing is going to happen again, but it wouldn't surprise me if we came all the way down to test this trend line. We're talking at 11,000, and if that breaks down, we're talking, filling that all-time that CME gap people were talking about around 9,500. We're gonna see those levels. You can only imagine what the state of it's going to be. So what I would say is I'd stay away from those caps, and to be honest with you, just play it very safe with the top cap coins. I'm talking Ethereum, Litecoin, Bitcoin, even XRP actually, and Chainlink, and get yourself on Bybit as well. Not Bybit. Get yourself off Bybit, and onto something like Bityard, where you're not trading with these declining assets. You're trading specifically with Tether that can be executed instantly, so you're not having to wait around for orders to be filled. I've got a referral link at the bottom, so sign yourself up from that. You get money off your trading fees, and the trading fees are pretty low anyway. It's 0.05 is lowest you'll find. You won't get that on Binance or Bybit or anywhere. Actually, it's the lowest there is. So get yourself on there anyway and start shorting this market, because that's where the money's going to be. Short the market, stack yourself some tether, and if you really want to, then transfer that tether over into spot when the dust has settled. But trust me, there's going to be some explosive moves, and you want to get on the right side of it, and you want to be trading that with low fees, and you want to be trading that with tether or dollars or pounds or euros. Anyway, I'll leave it with you there. Thank you for watching. Stay away from SXP.